Okay, so good evening, guys, and welcome back again from Monday. So remember, I told you guys that in today's class we're going to introduce liquidity and inducement, right? As one of the validations for our demand and supply zones. You remember that when we're talking about demand and supply zones, I emphasized on the emphasize on the validations for these zones, which one of them was inducement. And I said that instead of just treating them shallowly, like in a shallow way, and then like having to complete demand and supply and then having to like come back to them later on, I said that it's better we take these validations as full topics. Do you understand? And then combine it all together for our demand and supply zones. So today we'll be looking at a very interesting topic, interesting and important as well, which is what liquidity and inducement. Now, when you hear the word liquidity, what I want you to have in mind or what should come to your head is money. Liquidity simply means money. When someone is liquid, it means what? That they have money. Do you understand? And when you say that there's liquidity resting at a zone, it means that there is money resting on that zone. You understand that in the market, we have both buyers and sellers. So most of the times, the higher lows that people looking to buy at those zones, the lower highs that people looking to sell at those zones. Now, when these people have actually put their actual money in the market, right? And then probably they're trying to sell from a zone like this, their money is in the market already, right? And you see that what this is where the stop loss is resting. Wherever they have the stop loss is resting, it means that what that there is liquidity at that zone because there is a tendency that if price comes there, it's going to shoot them out. It's going to shoot out what their money, which is what their liquidity. So liquidity simply means what money. Why inducement, on the other hand, is just like deceit, right? When you hear of the word induce, it just looks like persuade. Do you understand? On the charts, an area of inducement is an area that is there to just deceive you to buy or to sell from it. Meanwhile, it's not the actual zone that price wants to react from. So it just like disguises as the zone that price wants to buy or to sell from, just for you to put in money there, for you to put in liquidity that price can now strip. Do you understand? So price induces in quest for liquidity. When it needs more liquidity to fuel itself, what does it do? It actually looks for an area of inducement and then tries to induce. Now, what I want you guys to understand is that it is liquidity that actually moves the market. It is what money that moves the market. You see, for the currency markets, that's for currencies, usually it's the banks that does the whole work, buying and selling, right? But you realize that the more money that the banks or the news pumps into the market, the higher the price goes. When it comes to crypto, the more people that buys one, the more people that buys an asset or a token or a currency, the higher the price goes. Which means that as people are pumping liquidity into a particular token, the price is increasing. Which means that liquidity is pushing the market. It is the same thing on every other chart. Liquidity acts like fuel. You will notice that whenever price shifts an area of inducement, right, or an area that there's liquidity resting above or below it, you see that it just moves with more momentum. So this is why you want to have this liquidity resting before or above or below your zone, depending on if you're buying or selling before triggering your entries, right? Because it increases it increases the probability of a setup, and you're very sure that When price mitigates that your entry, it moves faster because it has just swept liquidity. So the reversal to the opposite direction is usually what's very strict, right? Now we have different types of liquidity or different forms in which this liquidity can appear, right? It is almost everywhere on the chart, but the most recognizable patterns are one, the equal highs or lows, right? Equal highs or lows. For most of you that, let's say you've been trading since like 2021 or 2022, you would remember very well that there was a time that like the major patterns that people do trade are these head and shoulder, um, double top, double bottom, all of that. That when price creates a high just like this and it retraces and it creates what another high like this, it is what a sell signal for them, right? The sell signal for them to sell just like this. But then the concept of the introduction of the concept of what of price sweeping, liquidity, and all of that has now told us that what that since there are a lot of people looking to sell at this equal high, immediately price creates an equal high, they're looking to sell, they will have what their stop losses resting above these zones, making these zones what areas of liquidity. So long as people have what people are looking to sell at this area, they have their money what resting above, which means what that zone is what an area of what liquidity, which price can sweep at any point. So which means that when you see what equal highs or equal lows, whether the double bottom or the triple bottom, right, or the double top, they are what they are forms of liquidity. Equal highs and equal lows. There's liquidity always resting above or below them, depending on whether it is what a high or a low. If you should go to your chart for every time that price what forms these highs or lows, you would notice that what it always comes back to sweep them. You'd see that price does something like this, creates those equal highs and what sweeps the liquidity resting above them. Maybe it can reverse if it's reacting from the value demand or supply zone around this area, or what, or it will continue what to the upside. But for every time the price creates what, for majority of them the price creates equal highs and equal lows, it usually comes what to sweep them off. So these equal highs and equal lows are one of our forms of what our forms of liquidity, which is what a form of inducement. Now, your understanding of inducement is just like your understanding of liquidity and inducement is just like if you have a trading setup or an analysis, right? You want to make sure that you identify a form of inducement before that entry. And that is why I mentioned that what inducement is one of our validations for demand and supply zones, which means that for you to say that this demand is a valid demand zone to buy from, you need to see what a valid inducement resting below or above it, depending on if it's a case of what demand or supply. So these are the forms of inducement that you can see before your entry. That is what we're going to be taking today. So the first one that I talked about is what it can be the equal highs. Then you have price creates probably the first high, and then comes back to what creates another high in the same line, right? It is what an equal high, and it is what a form of inducement, because for every time that price was a form of what liquidity, sorry, but for every time that price creates what equal highs, it always comes back to what sweep the liquidity resting above these highs. The same thing for the lows. When you see equal lows on the chart, it will show that what that whenever price retraces, it does what it sweeps the liquidity resting below those lows, right? And if you look at the triple bottom and the triple top as well, for every time the price creates what equal lows, they are still what equal lows. The equal lows can be 2 lows, it can be 3 lows, it can be 4 lows. But for every low that is at the same level, there are what there are areas of liquidity, because this means that there are people selling from those zones. It's just like creating a leveled resistance. There are people selling from those zones, which means that they have their stop losses set above those zones, which means that there is money resting above those zones, making it what zones of liquidity that price can sweep. So this is what another form of what equal lows. It can be 3 lows, it can be 4 lows, it can even be up to 5 lows in a ranging market. Whereby price is creating series of what equal highs and equal lows. Remember when we treated market structure, I talked about the third type of market structure being what the ranging market structure, whereby price creates what equal lows and equal highs consistently without actually breaking out. Now, I told you guys that there is a type of demand zone called what the range created demand zone, whereby price breaks out of what a range, or a range created supply zone, whereby price breaks out of what a range to the downside. Now, this breakout of price from this range, just like this, is what is price sweeping the liquidity resting below these areas. So because price has been ranging, it's just like price moving within a confined box, right? And there are people that for every time the price comes to the downside, they want to buy because they think the market is ranging. But every time price comes to the upside, they want to sell because they think the market is ranging. Applying our knowledge of what supply and our knowledge of support and resistance, right? So when something like this happens and price notices that there are too many what stop losses resting below these areas, people are looking to what buy at these areas, people are looking to what sell at this area. What does it do? It actually sweeps everything because there are equal lows. Since the ranging market is formed by what lows and highs that are what almost at the same levels or even at the same levels, they're equal lows. And price does what does price do? Price sweeps them. And that is the main reason why I talked against what trading these basic support and resistance just like this, right? Because majority of the times whereby you're looking to buy from a support, maybe usually on the fifth slot, which is the fifth rule that we treated, price usually comes to sweep the liquidity resting below or above them. So long as people are looking to buy or to sell from a zone, there is liquidity resting on that zone. The only thing that you want to do now is to use it to your advantage to make sure that whenever price tries to take an inducement to sweep that liquidity, that after the sweep, the next place that price will get from is your entry. And that is the main reason why why it is part of the validation for a demand or supply zone that an inducement must be before your demand or before what your supply zone, right? And this is what another type of liquidity and inducement, another type of inducement that we have, which is what the trend line liquidity. I told you guys when I was talking about support and resistance, I said that there is what another type of support and resistance, which is the static type, which is what the trend lines, right? The type of the static type of support and resistance that looks like it is moving to the upside. The uptrend line looks like it is moving to the upside, but then for every time that price touches it, it bounces to the upside. Every time that price touches it, it bounces. Price is moving to the upside, of course. Remember that it's not as static as what the static support and resistance is like this. That is just in one level. For this one, price is moving to the upside. But for every time that price touches it, it does what? It bounces back to the upside. For every time that price takes and touches it, it bounces back to the upside. Which means it is creating what? It is creating equal lows, but like a moving low. Do you understand? Now, for things like this, for each time that price tries to approach this trend line, there will be people that will want to buy from it. Since they have noticed the pattern that for every time the price comes towards the trend line, it buys. So whenever price is now coming next to the trend line, there will be people looking to buy from that trend line. Meaning that when they put money into the market, they're supposed to be somewhere maybe, right? What they're supposed to see, which means that there's liquidity resting below this zone. For everybody that will be looking to buy for every time the price touches this trend line, they have their money set at this point, which means that there's liquidity to clear here. And that is why you see that price can do something like this, sweep it off, and maybe still continue what in that direction. This is to say that what another type of trend line liquidity, another type of liquidity and inducement that we have is what the trend line type of liquidity. There is always liquidity resting at every above every downtrend line, and there is always liquidity resting below every uptrend line, because there are people looking to buy for each time the price comes down or in cases down to touch what the uptrend line, sorry, and for every time the price what expands to touch the uptrend line, the downtrend line, sorry, that's this one. For every time the price retraces to touch this type of trend lines, what happens? These ones here, it sells. It sells. Meaning that when price approaches it, people are looking to actually sell, right? Meaning that there's liquidity resting above it, because these people have their money what? These people have their money resting above these zones. These are what? This is the type of liquidity that price can sweep. It's the type of liquidity that you can have before what? Before your entry. And then the last one is what the structural type of liquidity. Now, this is the most occurring of all of them. This is the one that you would always see. You may not always see equal lows before your entry. Let's say you have what a demand zone just like this, right? And then price does what? Price creates an equal low type of inducement, something like this. May not always happen when you're trying to validate your demand zone, right? The trend lines, something like you see, this is the equal lows, what it looks like, right? The trend lines, something like this. When price starts getting something like this, right? And then when it sweeps it, like when it sweeps the liquidity resting below it, right? It sweeps it up, mitigates and what continues. This is another way that price can what sweep liquidity from these trend lines, just like this, right? Or you may not always see the what other one did I write here? The equal lows, right? I will present equal lows with the double bottom, double top, and the rest of it. You may not always see it like this, but the one you would always see, like majority of time, the most occurring type of inducement is what the structural inducement. Now, the whole idea behind the structural type of liquidity is that you understand that in an uptrend, we have established that every uptrend has what? A higher low and a higher high, a higher low and what? A higher high. Which means that as price is what? Retracing, people are trying what? Like traders understand that what? These higher lows are protected. Price won't go what? Below them. So they would want to do what? They would want to buy as price is approaching this higher low, because they understand that the lows are protected and price will not go below them. Which means that for every higher low that price creates in the market, there are people looking to buy from that zone. And I told you that every zone that somebody is looking to buy or sell from, or that people are buying or selling from, is what an area of liquidity. There's liquidity resting on those areas. Every area that people are looking towards buy or sell from, or people are already buying or selling from, there's liquidity resting below or above those areas, because people have their money there. I told you that liquidity is what? Liquidity is money. So this most recent break of structure, price creates this one here, creates a high, and then we get to create what? A new break of structure at this point. There are people now considering this demand zone as what? As a demand zone to buy from, making it what? Making it a form of inducement. That is why I told you that the most recent break of structure, at every point, the most recent break of structure at every point is what? An inducement. at every point, every chart type, every market type, the most recent break of structure is what? An inducement. This means that when you hop onto your chart, you're marking out market structure from whatever point, you see the most recent one until price creates what? A new one, right? Once the price creates a new one, the most recent break of structure is what? An inducement, and it's not an area of consideration for you. Let's say, just like this one now, you have what? You have your lower low, your lower high, your lower low, your lower high, your lower low, your lower high, and what? Your lower low. This was the lowest point that price was created. Okay, your lower low here, there's a lower high here, another lower low before what? A change of character and all of that. Now let's say for something like this now, this would have been a supply zone that most people would be what? And most people would be looking to sell from. Something just like this. Now, when I talked about your most recent, your most recent break of structure being what? Your most recent break of structure being a form of inducement. This was the last break of structure that price puts in. This one here, before what? Before changing character by sweeping above that high. Now, why was that particular high swept? Right? Why wasn't this a valid supply zone that price would have reacted from, like sold from, and continued its own way, right? So probably mitigate and then sell, right? If you look, this was what the most recent book of structure, which I told you that in most times it's going to be what? It is going to be taken out to mitigate areas of what? Higher areas. So whenever you mark out your structure and you have a zone as the most recent break of structure, consider it an inducement no matter what. Just consider it as an inducement. Even on this area, if you look at what happened here, we have what? We have a low at this point. This is a higher low. This is what? A higher high. Marking out structure from this point now. This is a higher low, and this is what? A higher high. This is what? A higher low, and this is what? A higher high. This means that at this point there would be people looking to take buy positions from this level. Why would people be looking to take buy positions from this level? Because it is what? It is a higher low. And people are looking, people understand that what higher lows are protected levels. And they would want to that for every time a price comes to those levels, they want to take buys. And since there are people looking to take buys from this recent block of structures, it makes it areas of what? Liquidity, makes it inducement levels, right? And if you notice what happened for this particular one now, you can see the way that price swept through it without even reacting to it at all. Everybody looking to buy from this demand zone would end up taking losses. Why? The most recent BOS is what? A form of what? Inducement. This is a type of structural liquidity or structural inducement. Now, this is not, sorry to, let me add this. This is not the only reason why this set of code, right? But then we're treating inducements. That is why I'm emphasizing more on inducement. We'll still get imbalances as well. We'll do what? We'll also talk about imbalances and the rest of them. And when you take the charts, for every time that price does this price pays what this BOS, you notice that there is a cycle that price moves in. Most of you, when you're marking out the structure, you have seen something like this. And this is like what price comes, creates what an incomplete pullback, just like this. A most recent break of structure sweeps that most recent break of structure to mitigate what a demand zone, continues, creates what another higher low, higher high, takes it out to mitigate something like this, right? Creating what something just like this, a chain just like this, which means that this BOS, before your valid demand or supply zones, majority of the times they are forms of structural liquidity. If you go through your chart now, you can see price taking out these levels. This is a level of supply that people would have been looking to take sales from. And you can see the way that price invalidated it, right? And after sweeping it out, mitigated this level where this breaker block here and would continue selling. Although we've not treated all of them, I'm just trying to show you guys examples of what of these levels of inducement, this structural liquidity. And if you check as well, for equal lows, for every time the price created what lows that are what that are similar or highs that are what at the same level. Let me see if we can look at examples of some of these forms of what liquidity today, right? You can see that I think this is okay, not really they're not really equal. But let me see more examples. For everything the price creates what lows and highs that are at the same level almost every time. That is which is even like it's more likely. I think every time is more correct to say the price creates lows and highs that are of the same level. You've noticed that what it always comes to sweep it every time comes to what sweep it, either go what below or above them. You can see here we have what we have this low and what this low as well, right? We have this low and this low. These two lows, right? You can see that this was low one, low two. These are what relatively equal lows. You can see that what happened? Price came, reacted a bit like it was already buying from it and did what? Swept it. Swept the liquidity resting below what the lows because what there's liquidity resting below this point. You realize that for every time a price creates equal lows, it usually goes what below it, right? And the equal highs as well. If these were equal highs, you notice that for everything that price creates these equal highs, what does it do? Usually what sweeps above it. There are like a whole lot of examples on the chart. Let me see if I would see more examples on these lows and highs. You can see what this is another equal low here. We have low one and low two. I noticed that when price went what when price came to this zone, what did it do? Reacted a bit and did what and swept the liquidity resting below it. You can see how sharp these sweeps are. They are usually like what long candlesticks that just what does the work, sweeping liquidity resting below what equal highs or equal lows, relatively equal highs or equal lows, or even sweeping the liquidity resting at what this structural points, right? Structural liquidity, the equal highs and the equal lows level of liquidity, the trend line liquidity, all of that, right? Price usually comes what to sweep the liquidity resting below them. Here you can have what your trend line as well. Here we have what the trend line type of liquidity. The price did what the price came to what price swept below it at this point by failing what. Remember that the trend line is a type of dynamic support zone which you anticipate that price comes, mitigates, and what buys. So meaning that for each time the price comes to this trend line, there are people that are looking to what buy from it, right? Each time the price approaches the trend line, there are people that were looking to what to buy from it. And you can see that since they have their money resting below this area, what the price sweeps below it. Price takes out this trend line, whether an uptrend or a downtrend, they are what they are types and forms of what liquidity and inducement. Both the uptrend line, the downtrend line, the equal highs, the equal lows, right? Let me see if I can still see more examples of the equal highs, especially, right? You see that for every time the price creates these equal highs, what does it do? It usually comes to sweep above them. Here you have relatively equal highs at this point. This high one, high two, and what high three. And you can see the way that price did what the price swept above. So if you go to your chart and you see 2 or 3 candlesticks, right, at equal levels, or they are weak creating what equal levels, whether highs or lows, you'd notice that price usually eventually comes to take out those levels. It is because they are what forms of liquidity and inducement. Because there are people looking, you can see here now we have this equal high, we have this high one and what high two that are what on the same level. And you can see that price came back to what to sweep above them. because there are people looking to sell at these levels. There's money resting above these levels. And that is why you notice that what happens, the price comes and takes out those levels, maybe continue in the direction of level or move in an opposite direction, depending on the market trend. And so you want to use this price sweeping the areas of engagement to your advantage. And that is why it is one of your criteria for what validates a demand or supply zone. Meaning that we are now establishing that before you say that an area of demand is safe to buy from, you must have one of these forms of engagement before it. You must have one of these forms of engagement before it. So what I want you guys to do after this class is to go to your chart, any pair at all, right? You can see here now we have this relatively equal lows here, this low and this low, right? And you can see what happened. These are equal lows that before the price do. Price swept them and what continued to the upside. I want you guys to go back to the chart. Check out these lows and these highs, right? Maybe created by waves or or candle bodies or anything. Check them out and see that for everything the price does well, the price creates this whether equal lows, double bottoms, there's equal lows and high, whether 2 or 3 or 4 or 5, even the ranging markets. Remember that for price to create a range created supply zone, it means that it has to break out, it has to strip liquidity to the downside. Correcting that for price to create a range created demand zone, it has to strip liquidity to the upside. So price is constantly seeking this liquidity, creating inducements so that people can put their money where they are not supposed to, thereby giving it something to strip, right? You can see here now we have this relatively equal highs, this high and this high. And you can see that what happened, price was swept above these highs, right? That's an example of the equal highs. It is like almost everywhere on your chart. Liquidity is what moves the market. So you would see, you will not even go, examples will not even discuss, right? So I want you guys to go back to your chart after this class. Try to map out, like just go to your chart, try to map out equal lows just like this and see what happens after price pays the equal lows. You will see that definitely those lows get swept right after. And even if they are, let me say price pays them and continues its way. If price should come back to that same level, what does it do? It will still sweep them. Because there are areas of it's just like there's money resting there, the price has to peak. There's still money resting there, the price has to peak. So the whole idea behind this liquidity and inducement is that you want to see them appear before the zones that you say is your valid demand zone or your supply zone to buy or to sell from. That way, it increases the setup probability, because you understand that if price is sweep this zone and mitigate your valid demand zone, it will push to the upside with more force. It has swept a level, right? So you're most likely not getting swept, right? So I want you guys to go back to your charts, map out these equal highs and equal lows. You may not, there's no need mapping out structural liquidity yet, because I would like to lay more emphasis on that one with more chart examples as well. Hot price and we're meeting on Friday. Yeah, definitely. So that Friday's class, hot price, show proper examples of what the structural liquidity and what I mean by recent BOS and all of that, right? But the equal highs and equal lows should be relatively simple for this class, especially for the sake of the beginners, right? So I want you to just open your trading view, go to your chart view, just like I am on my own now, right? Map out the equal lows, right? Let's say this low now and this low, right? Map out the equal lows, maybe using your what do they call that? Your trend line soup, right? Map it out, and you see that after price created this equal lows, what does it do? It comes back to strip by going below it, right? So I want you to map out this equal lows, maybe 2 or 3, right? On 2 different pairs. Go to 2 different pairs, map out equal lows, and see what happens there. You can send it to the assignment group for me to review as well, right? And see what happens after these lows and highs are created. They are usually taken out because they are what? They are forms of what? Forms of liquidity. And I talked about what the trend line liquidity as well. I talked about what the structural liquidity. But your assignment today is just to focus on what this equal highs and equal lows. In our next class, I'm going to make sure that I've moved my trading view to premium. We cut price and look at what this structural liquidity properly, because it is one of the most prominent types of liquidity. That's the one you see most. Because for price to continue moving in an uptrend, you have to keep towards new highs and new lows. That's higher highs and the higher lows. In a downtrend, the lower highs and the lower lows. So which means that price has to keep creating these structural points. They are the ones that you would see more frequently. And they have to be what? To be taught with extra care, right? So in our next class, that's what we're going to fully focus on. And then we start what? We now start infusing the rest of them and start looking at what these demand and supply zones in full, right? Start validating demand and supply zones and see what makes a zone a valid zone to buy from, or what makes a zone a valid zone to sell from. So I think we still have time. So I'm going to entertain questions. If you have questions based on what you're studying, you can just okay. I think there's some hands up already. So Victor, go ahead.
Okay, good evening.
Yeah, good evening.
My question is, speaking of the equal lows and equal highs, can the wick and a body form an equal low and equal high? Like one has a wick and the other one has like a body?
Yes, it can. So long as it's equal lows, it can be 2 wicks, it can be 2 bodies. You know, it's not all candlesticks that have wicks. It's not all candlesticks that have some candlesticks can just be only body. Do you understand? Without creating wicks. Why some candlesticks can have wicks? Do you understand? But when 2 candlesticks are at equal levels, whether wick to wick, body to body, or body to wick, do you understand? That is an equal low.
Okay, then sorry, for the trend line liquidity, there's the trend line liquidity. You know, normally the normal one is a minimum of 2. For the trend line liquidity, is it still a minimum of 2 or like 3 or like a specific?
Yes, 3. You know, I know that this is a trend line with 3 touches, right? So for you to actually say that this is a valid trend, with these inducements, there are areas that people would actually consider to buy from. You understand that there is liquidity resting at every higher low, right? In an uptrend. These higher lows are demand zones. I told you that every higher low is a demand zone that people would look towards to buy from. So these trend lines have to also be what valid trend lines. It can be 3 touches. You understand? Minimum of 3 still. That rule still holds.
Okay. All right. Thank you very much, sir.
Okay, so bouncing, you gotta meet yourself.
Yeah. Please, first of all, this double top, double bottom or liquidity is kind of confusing, because I think the normal structural liquidity is after taking out the liquidity, it will continue in the same direction. But this double top, double bottom liquidity is like after taking it out, it will like continue in the opposite direction. Like I don't get to understand.
Okay, so you know there is a type of trading strategy that people call the support and resistance, right? I think that's the basics of what most of what we trade today is come on. Now, this support and resistance, right? They have the double top and the double bottom strategy. That whereby